Bloomberg Audio Studios.
Podcasts, radio, news.
Start off here talking about some of the growth rates that we saw in the most recent quarter. We did see pretty decent revenue growth, particularly on the organic side. You had decent growth in margins and, of course, decent growth on the bottom lines. Investors, though, are raising a lot of questions here about what the cost structure is going to look like for the quarters going forward and whether you can maintain that full-year outlook.
Yes. Well, at this stage, the costs that are really causing us to pay very close attention is, in the first place, of course, cocoa. There's a lot of discussion. There's also some sugar and some labor costs. But as it relates to the year, I would say on cocoa, we're fully hedged now. We have a pretty good idea on the sugar costs, and labor is also pretty clear to us. So we feel that our forecast for the year, staying in line with our financial algorithm, is going to be sustainable, and that we will deliver a year as originally announced.
On the point, though, of cocoa prices, even though you may have locked in your prices for the year, if we do see prices remain elevated, and most folks in the market seem to think that cocoa is going to kind of stay where it is right now for the next few months, when does that become an issue for you as you start to plan for 2025 and beyond?
Well, it is already an issue. The big question, of course, is how to hedge for 2025. We have a number of different techniques that we use. We monitor the market very carefully, and then we will lock in at the right moments. It is expected that cocoa will come down eventually. That's probably going to be more around the September-October timeframe. Why? Because that's when the main cocoa crop will become clearer and people will have an idea what it's going to look like. There is a mid-crop. There's two crops of cocoa in Africa. The mid-crop looks like it's pretty good, which we are having data around now. That's why you've seen cocoa come down a little bit in recent weeks or days. And so the big moment is September, October. In the meantime, cocoa will go up and down. There's not a lot of trading taking place. There's a number of traders exiting. So at those moments, we will take the necessary steps for next year.
So Dirk, does that mean that you're hedged throughout the rest of this year?
Yes.
But not in 2025?
Already a part of it. I can't go into our hedging strategy, of course, but yes, we have already taken some positions for next year.
Based, though, on the volatility, and I'm assuming it's very complicated to hedge when prices are so whippy like this, is that why you're increasing your non-chocolate offerings? Like, do you need to put more money into that?
Yes, well, we will need to continue to support chocolate, as you can imagine, even if we hedge well and so on. Where our cocoa price is this year versus last year, and where it will be next year versus this year, there will be an increase. So chocolate prices will continue to increase, at least for the remainder of this year in 25. And so we will have to advertise, we will have to promote, we will have to support our chocolate business. At the same time, 70% of our business is not chocolate. And that, of course, gives us an opportunity to offset whatever could potentially happen with our chocolate business. And so, yes, pushing that, having new offers, innovate, promoting, that is going to be quite crucial for us to balance the whole equation.
Well, those are some of the input costs. Let's talk about the consumer side of this, Dirk. As you know, there's been a lot of concern that a lot of consumers are scaling back spending. They're trading down to slightly cheaper brands. And I know that Mondelez had to do quite a few promotions, not just on the chocolate side, but on some of the cookies and biscuits and other things out there as well. Is that promotional and those discounts, are those going to continue throughout the rest of the year?
Yeah, let me talk with the consumer. If you look at the global consumer, I think the consumer is gradually getting into a better place. We clearly see the consumer confidence in Europe, for instance, going up. In emerging markets, remarkably, consumer confidence is strong and offtake is strong too. So it's really about the U.S. consumer. And the U.S. consumer, the ones that are decreasing their frequency in the category is the lower income consumers. They have seen a gradual erosion of their available income. And so they need to be very careful of what they spend on, when do they spend it, at which price level are they going to spend it. And so that is clearly the group of consumers that we need to pay attention to. And yes, that means we need to have our packs at the right prices, do the right promotions, advertise our brands, and so on. And it's really all about how do we make sure that these consumers stay in our categories, in our brands, and that they do that with the right frequency.
Dirk,
and so yes,
that seems a lot.
Yes.
Dirk,
Yeah.
that seems a lot like we're going to get into a value war. Is that what we're going to wind up getting into here?
Well, we're going to remain clever about that. We don't want a value war. Again, just like between chocolate and the rest of our business, 75% of our business is outside of the US, where things are very different. So we don't need to go into a value war in the US. It's not necessarily about getting into a war against our competition. It's about the fact that the consumer, as soon as you surpass certain price point, they switch off. And it's going to be about hitting those price points and making sure that that generates enough interest for them.
In order to maintain that interest and generate that interest, going beyond just price, there's a question of availability. And I know last year you guys had to make some changes with your distribution points to make sure that people who wanted your snacks actually had the ability to get them. Are you still expanding those distribution points out this year?
Yes, we are. And in fact, we're doing that in most of our markets, even in the US. Last year, we lost some what we call TDPs, that is distribution points. So we're getting those back in these months as we are right now. And at the same time, around the world, but mainly in the big emerging markets, the opportunity for us to complement our same store sales and growth that we have with new stores is a huge opportunity for us. So, for instance, just in this first quarter, we've added 100,000 new stores globally to our range of where our products are being sold.
All right, Dirk, we only have time for one more question. I have to ask you the question that I think every food maker, snack maker is being asked, and that is about the rise of weight loss drugs, these GLP-1 inhibitors that, at least for a certain cohort of people out there, are reducing their appetites and, in theory, the amount of money that they're spending on products like yours. Are you seeing an impact?
No, we're not seeing an impact. As you can imagine, we monitor this quite carefully. We have models, we discuss with the drug makers, we follow very carefully the consumers that are on the drugs, how do their habits change. And for us, knowing the things that we know today and the curve that we see of adoption of the drug, everything is in line with our models. And those models predict that in 10 years' time, it will have an effect of between 0.5 to 1% of our volume, which is basically a margin of error for us. So now things can change, but so far we've been monitoring this for the last year. We do it every quarter. Things have not been different than what we have been forecasting.